From Eightcap. Welcome to today's update. So also big shout out to the TradingView community as well. So looking at the pound yen, it really doesn't matter which one you look at today. Take a pick. We're seeing risk. We're just seeing whether risk or safe havens jumping to the yen. It's after the Bank of Japan today. So the Bank of Japan's Governor Ueda, he's proposing an ending of negative rates. And we've also seen an update that there's an end to the yield curve control as ETF purchases by Tuesday. So that basically means that they're going to end the yield curve control, and they're going to end ETF purchases by Tuesday. And that has seen some of the those big moves we've seen from the yen to the upside. So preparing to wind down much of its massive monetary easing program, and that's from the Nikkei. So it's a bit of details out there, but we can see at the moment, I've just readjusted this trend line. It does look like we have a continuation in play. Now, if you are looking at the the pound yen, we really want to see what happens. We're going to move up to this area here, and also if we do see a break above this resistance area into the breakout territory and new yearly highs. When will we see the Bank of Japan step in? Now, obviously they do want the yen to be weaker, but they don't want it to be cascading lower. So will we see a stepping point? That's if we do make it back up to this resistance. But for now, it does look like a nice little pattern. I readjusted this trend line. We have a nice higher low here after this higher low. And now really what we want to see is a move back up to test and break that resistance. Now, the dollar yen is at 149.78 at the moment. It's trading 0.44% higher. The pounds are close to 0.4% higher. So again, we have seen some step-ins around that 150 to 151 point against from the Bank of Japan to the dollar, and that has led to overall selling. So definitely also keep one of your eyes on the dollar yen, just in case we do see, if we do see some big moves to the upside and we get back up to that, top end of 150, does that then mean that we're going to see some pushback from the BOJ, and will we see, the yen pick up again? So we can see here we had this little mini double top. We came down. We had a nice little move down. We've got that higher low. Had a bit of a grinding session into last week and then yesterday, and then we've had this nice influence today with this nice strong move higher. Volume at the moment isn't really causing anything really of concern, but what we would like to see is if this is a real continuation. We've got the high low here. I've got a little mini breakout here. Will we see a new move up to test this resistance? So if we have a break of this resistance and then a pullback and then a new high, that could be the catalyst to tell us that we're going to see further higher prices, and we could even see moves back by buyers to get back into the that 191 area and above. So 192 could be a target, 193, 194 could be a target, and then if we do get back up there, what's going to happen then? So really for us, we just want to see if this continuation can come up and test this resistance. If we have a good fail at this resistance here, could see a pullback to the trend line there. Could be very short term short on the cards, but otherwise we'll see if we can get a bit of a move down with another higher low and then a breakout and confirm break of this point, confirming this trend line is going to continue to push higher. So that's what we are having a look at. So just so you know, just once again, we have seen, the Bank of Japan has met. We also had the cash rate as expected from the RBA, but the Bank of Japan have increased interest rates up to 0.10%, and then some of the notes about the yield curve control and ETF purchases also been updated as well. So quite interesting, and we'll continue to monitor this situation as the day moves on and then into today's London session. So thank you very much for your time, and we wish you a fantastic rest of your Tuesday and good trading. Bye for now.